The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, May the 2nd. My pleasure to be here with the Dow down 72 at 24,026. The S&P right now is down 9 at 2645. Comp index down 14 at 7116. The VIX index is actually down. Amazing. It's down at 16.53. Oops, is that a 16? So 15.33, down 16 cents. The red print against the black background is a little difficult to see. There are a couple of very important things here. Look. What do we have? We have the E-mini right now. It made that peak E at 2682 in the 120-minute chart. The fighting patterns of the arch and the cup formation are right in place right here. You can see it both in the daily chart and the 120-minute chart and in the weekly chart. And it makes it real simple. At 2643, down 8.50 right now. By Friday, if there's a close under 2611, should I make it a little higher? Anywhere between 26.15 and 26.11, that's a very important cushion. If we go under that, that's going to be very, very negative. Bunch of things going on here. Look, the IWM, Apple, of course, is helping the QQQs, but it's really the IWM that's up here. It's up 70 cents. We've seen this movie before. The IWM, the Russell 2000, suddenly shows some strength when the other indices are pulling back. But when the other indices either rally or hold steady, the IWM can't get out of its own way. It gets stuck in this range between the 156s resistance and the 152 support. If on Friday after, wait, today's Wednesday, yeah, 2.5 days time, if Friday at 4 o'clock, the IWM is actually trading above 156.20, that's very impressive. But until that happens, it's just stuck in a range. And that's the way you got to look at it. Look at the QQQ with Apple helping it. It's really struggling. It made a little bit of a higher high today, but it's down 60 cents at 162.19. MACD is okay. Stochastic's very weak. On-balance volume is very weak in the daily. The weekly charts are very weak. And the monthly chart is starting to dip, but the MACD is still strong. Stochastic is under 80%. Beginning of a new month, we'll see if it can get back over 80%. So within the context of the markets, the indices themselves are mixed to weak. And when we go to the, if we're going to gold had a nice rally earlier on. It's pulled back a little bit. It's up 0.6 right now at 1307. It actually hit the 1312s. It's really struggling. Here it is on the 200-period exponential moving average. I'm going to talk about this particular pattern in the weekly chart. We can see it in the daily of the XLE. I had a really good question about that a moment ago, well, earlier this morning. So the 200-period moving average in gold, the weekly chart at 13, I want to get it exact, 1306. This is going to be really important support. The technicals in the weekly chart are very poor. But wait a minute, silver, you remember that spectacular move to the upside in silver without gold? And I said, something's wrong with this picture. Well, silver's again having a nice move. This is like the Russell 2000, the IWM, and the general market. You got this rogue character, which is just constantly, it reminds me of my wife's family had this little dog called Bingo. They had two dogs. One was a poodle and one was this Maltese something or other. Well, the poodle was a really bright character. It was a lot of fun, did really clever things. This Bingo, poor old Bingo. Bingo would lie there, a little white fluffy dog. It would lie there on the floor. Nothing, quiet. And out of the blue, like 9 o'clock at night, after being just pretty much a dish rag most of the day, suddenly gets up and it runs down the passage, and then it slides because it was a very slippery floor, and it would slide until it hit the door, and then it would come running to the other and then it would come back and just sit there and go puff, puff, pant, pant, and just stay there. I'm looking at the silver's been doing this. It's the same sort of thing. So now silver's wide awake. It's up 30 cents at 16.43. Is this the turnaround? Well, the daily says it's a bounce, and the weekly says not really, and the monthly says, well, it's going to need a lot of work. It needs to get to the 1680s before the monthly even acknowledges with an eyebrow that there's something going on. So Patton the Dan says, Basil, are you saying silver has gone to the dogs? Hey, that's a good one. That's a good one. Yeah, basically silver is just in its own world. It's playing a little catch-up both either way. And if silver actually carries you for 2 full sessions to the upside, I think it's going to not. This won't be a short squeeze as it was back in about like mid-April, so flying up to that 1740s area by itself. If gold actually turns around, it's going to be a good thing. And why do I even mention this? Because look, the dollar index is way up at 92.62. Let me just show you something very interesting here. You see this dashed line? I drew this in a long time ago. What I was explaining was there's a pattern that I've observed over the years, and it's like in the back of my mind, it just sits there all the time saying, watch out for the sine wave, S-I-N-E-W-A-V-E, because there are times when you get a midpoint line and you can go up and down and up and down, but over a period of time, that fulcrum, in this case, the fulcrum of 72.62, this dashed line that I drew, that's been very significant, both on the upside and the downside. And now, once again, we've broken to the upside and we're at 92. So we're at 90, close right now, 92.62, lo and behold, right there, that exact number. So what we're looking at is, we're looking at the chance, and I'm saying it's a chance because in technical analysis, you know, you're doing an MRI of the patient or an X-ray of the patient, and that could mean that the implications are that you could be reading it exactly right, but there might be one little thing that you didn't see, or there's another little squiggle coming up that's going to change the whole perspective. So here we are. If there is a break into the 93s in May, 93.70s, you could see a big move to the upside before we come back and we retest the 92.62. Whew, that's what I wanted to say. Got that out of the way. And of course, we do remain long for my subscribers. We've been long since the 90.02 level via the UUP, lousy vehicle, but it works. And now the dollar is at 92.62. Hey, look at this, EUR-USD. Trying its best to form some kind of support here, but nope, it just went right through the 200-period exponential moving average after going through the 200-period simple moving average. The weekly chart looks really ugly. This candle at this particular point, we're only halfway through the week. You can repair that by the end of the week. We'll see. But what's really interesting is that the monthly chart has hit the 9-period moving average, the black line, and it's under it right now, but the MACD is still pretty good, and stochastic's still strong at 83%. USD JPY, as we go to our break, and USD JPY should be up a little bit. Yes, it's up 0.05. Very strong move. Started a leg E just above the 200-period moving average at 109.9. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So a bunch of things I want to do right now. The XLE, the question I had from Greg was unable to call in today. I may have to view your show tonight. Is the ERX also the XLE forming the body of your stalk leg pattern? Thank you, Greg, Austin, Texas. So the answer is yes. It's a perfect oval pattern. And where will it fail? It would fail. It's in peak D right now, having the low of March, was it 29th of April? It was April the 2nd, the low of 64.93 started the new move up. Because it made a lower low, it went to peak A, B, C, and then it stopped at a D with a little double top, 74.57, 67 on the 26th of April, pulls back for a day, retested with a slightly lower high, pulls back, and now it's a nice green candle. So for this to really succeed in being a Chapman Wave stalk leg formation, it cannot even break below, let alone close, but it definitely needs to hold 73.64 before it takes out. In other words, it cannot hit that low or take out that low. Preferably before then, it's got to go above 74.67. If it does that, that's the breakout. That starts the neck, and then you can get an E, and then you can do a pullback going into the body of the candle. Where does it fail? Where does this become a difference between an oval formation and a breakdown for the Chapman Wave methodology of the pattern that we call the stalk leg? See, here's the leg. This would be the body. Then you would get the neck. Then you get the beak, and the beak comes right back into the body or below. If it goes below, it means something else. And the other thing is that when a stalk leg formation finishes, when the bottom of the beak is formed, there's usually a fabulous rally, and then you're on your own. You have to look for new patterns. So weekly chart is holding beautifully in the S&P Select Energy Spider ETF, trading at 73.76, up 40 cents. The MACD on the daily is just about to turn down, but still very positive. Stochastics at 82% is turning down. It is positive, but it's hinting at something else that I need to talk about. The unbalanced volume went to a peak D as well and is pulling back. As it stands right now, this is a high-level consolidation, and even if there is a pullback below 72 to start a leg, that would be a leg C to the downside. What I am looking at is the weekly chart is suggesting that the whole area of 72.10 to 71.50 could be an area of support as the XLE, the Select Energy Spider Fund, holds very well. So I hope that answered you. The answer is good eye. And the rest of the statement is good eye, but it must not close below, or actually go below, let alone close. 72.27, the low of the 25th of April. And preferably very soon, within 2 or 3 bars, by Monday at the absolute latest. If it hasn't taken out that low, it needs to be pushing above, and that'll start the neck formation. Good. Nice question. Good question. Good eye. TRV, I haven't looked at for quite a while. TRV is Travelers, and Travelers is part of the Dow. Travelers is down sharp. He's down 2.66 at 128.43. Made a peak D top in the weekly chart right there. And that was, very early in January. Is that the second week or so? Oh, sorry, February. Second week of February. The week of the 2nd of February makes a high of 150.55 peak D, and now it's in a leg A, B, C, leg D to the downside. What is, I haven't updated this for quite a while. There's that E, I meant to move it to the right. Oh, Chapman Wave 2-bar reversal, 150.42 in January, and 150.55. A 2-bar, Chapman Wave 2-bar reversal, and lo and behold, that's a peak E of consequence. Be careful. It's underneath the 9-period moving average. Travelers, companies, insurance. This is not good. It's got a real problem. It's breaking down. Let me just see something if I actually notate to the top. So that would have been A, B. That was the B. Oh, there it is. Okay, so B. C is at 150.42, and then a squeak to that 55 level. Wow, isn't that amazing? Look at this. How many times in all these years have we looked at Ds that have been absolutely of significance with a tiny doji, a silent doji, and then the next bar makes us high all the time? I wonder if I can see any round numbers here. That'll even add to it. How did I miss that? 150, there it is, round number close on the first and the second. It pops up to 150.55, and that was it. Sayonara. A, B, C, and even made a peak C1, C2 double top in the arch formation. Oh my, what a beautiful example of Chapman Wave methodology. So there you are. So that was a peak D in, so peak D daily in Travelers. I was expecting that. Why did I not follow it up? Look, I just missed adding those 2 letters in the daily. Peak D in the weekly and a peak E in the monthly. Hat-trick top, timeout, big timeout now for Travelers companies. Next question I had was Apple. Oh, Apple, huh? Apple. Trading up 734 at 176.43. Has not taken out the high of the week of the it was the 17th. Yeah, 178.94 was the high on the 17th of April. It needs to take that out and close above it to be able to establish something. Isn't this the one that had the very interesting? Yes. Remember, I had no other way to count this. And I said, this is a peak C in the daily chart of Apple. It is highly unusual to make a major top at a peak C in the daily chart. Something's going on here. Well, what went on here is that we've been pulling back, try to rally, went to the peak B minus, great peak B minus, and now this big move here at 176.50 has a lot of points, 181.50. Oh my goodness. So 181, it's got over 4 points, almost 5 points to go to be able to make that missing leg D. I don't know if it's going to do that, but one thing for sure, you can look at this and say, you know what, if I put everything together, I can make a composite sketch and say it's been making a double, then a triple top, quadruple top in the 175 to the 181 area, 183 area. So let's just see what happens here. But Apple, no question about it, Apple is helping the Qs today because they'd be down quite a bit if it wasn't for this 4.34% gain in Apple. Nice action. Now, my rule of thumb, which thumb is to make it my rule of my right thumb. If this gap to the upside, which is not on a Friday, it's on a Wednesday, if this gap is able to not take out the low that was made today, the gap up low, give you the number right now, that's the gap up low of, a little slow there, aren't you, huh? 164.20, 169.20, 165.27, 165.27. So I'm going to type that in, 165.27. I'm going to make it even more refined. I'm going to say it can break that low, but if it closes inside the candle of today, that's a big positive. But I'm going to make it really strict. When we get back, I'll tell you what I'm looking for in Apple, and I'll also discuss the market, because I had the Chapman chin gauge flash yesterday.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, so there are just a slew of questions here, both in the den and here in the email. So let me just, I've done quite a lot, but I want to do three coming up here. This is Finisar. You know, I've seen the symbol for years. I've seen the name, but I've never actually said it out loud. Finisar. Is that a financial surreptitious armor? Finisar. Anyway, trading at 16.26, up 53. In the weekly chart, it made a peak C back in 2014 and then plummeted, made a lower low. in 2016. At the end of 16, it made a peak C and then it plummeted again. This is not like D's, that's for sure. And well, let me go back. So I shouldn't say that because it has had an A, a B, a C, a D, E, and even an F. So then it did the Chapman wave perfectly, and then it just got stuck in that range. So you look at your longer term charts. In fact, this is a perfect time here in May. We're preparing to say, okay, later in May, maybe in June, we're going to get some fabulous buying opportunities. I'm saying to subscribers, we're building a nice cash position. That cash position is going to be put to use with some of our favorite stocks that we want to pull back sharply and to be getting them at really low prices. But if you look at your charts, you'll see how many are in mid-range. Look at this. This is just sitting in mid-range, and because it's mid-range, it says when it gets towards the lower range, this is where it has a very nice bounce. When it gets to the upper range, this is when it comes back, and this has been going on since 2011, 6 years, 7 years actually. So I'm just going to say that on a very short-term basis, it's gapped up today. I don't know if that's an earnings report or what. The weekly chart is improving a little bit. The daily, this is like a Chapman wave. This is like a Chapman wave restart, where it goes to peak A and then it goes to peak B. Then it breaks down, but it doesn't take out the major low that was made. In this case, it was the low that was made at $14.25 back on the 4th of April. So it's stuck in this range, and let me just do this for you to show you what I'm talking about. It's that rectangle pattern that can last a lot longer than your patience. Here comes the thing. So the question is, Tim wants to know. So Tim, what I'm saying is, normally in this pattern, I'd say towards the upper end, sort of put your stops in, and in the lower end, you put your buys in. That would be just at about 15 or a tad under, and just above 16. And we're at 1627 right now. I've got a feeling thank you. This is a good eye. The Finisar, whatever the heck it is. Somebody might have said, I've just got my no, nobody told me what it is. I could do that in a moment, but in a moment, what I'm looking at is at 1627, up 54 cents on a day like this, up 3.43. Maybe there's earnings. I need to check. I don't want to just give you some blah, 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 without knowing what I'm talking about. So, news, yes. And what does it say? It says, waiting for headlines. There were no headlines. This is sometimes like this particular thing in TradeStation. So, all right. So all I can say is I love this action right now. It hasn't broken out, but because this has been on your radar, this is for you, no one else, unless they do their homework. I'm saying to you, start a position at 1628, even though this is where I'd be cutting my position if I was long, because it's getting to the upper end of the range. Look at the strength of the MACD and the histogram, so strong. Look at the stochastic having made a real nice sharp reversal. On-balance volume is good. It's not great. It's good. But I'm really looking at the chance that if this had to go to 16.53, 16.58, somewhere around there, and hold for 2 days, somewhere in that range, boy, that weekly chart MACD would surely start to cross positive. And the stochastic's dead at 18%. It really needs to be moving towards the 25%. So I'm going to say that when you are in this situation, that whatever you've done to ask me this question right now, I'm going to say there's a chance that it could be working. And I would say for a 2 or a 3% risk, on a small, it has to be a small position because it hasn't really established a breakout yet, I would start the position. Since you've kept this on your watch list, if it's in a leg D or E in the 120-minute chart, I might have to change that. It's only in a B. So I like it, yes. And I'm going to put this down because I want to watch it. I'm looking for stocks just like this that have been consolidating and now are just showing some sign. This is not showing any sign of great strength, but what it is showing is a very good sign of relative strength, and I think that at this particular moment is important. Finish saw. Okay, so that's that, and all I would do is 1576 is the 9-period exponential moving average support. You know, if you want to hold it to 1570, so that 9-period moving average, which has acted as a kind of a hugging point for the price, you could do that. And I'm going to be following it as well. I've written it in my book. So here we go. Finisar, one of those that has held very nicely for about three weeks now, and it has just the sign, a little symptom, a little smidgening of strength that says it could break out. And if it breaks out, then I have to call that brand new leg C. That's really why I'm looking at it. But it's the technicals that are really supporting the rally. Next question I had was MasterCard trading up 6.31 at 186.58. Look at that move. A, B, leg C in the daily chart. So these, there we go. So MasterCard is not a Dow stock. Visa is, American Express is, and that's very interesting. Yeah, so you've got Visa and American Express, but actually it should be more MasterCard and Visa, just in terms of, well, I don't know. That's the Dow stocks, and it is not a Dow stock, so it is not impacting the market per se, but now you've got yourself the alternate count of a D, G/D. I'm calling it a D for now, and that's very good action. Price-wise, the MACD and the weekly chart really needs a lot of work, and stochastic's down at 72%, but it is a leg F, and I'm pretty sure this is going to be a recycle. So I'm going to put an F/B. So MasterCard is acting beautifully. It's up 3.45%, and that's really helping the financials, the XLF, which at this particular point is down a little bit. It's down, yeah, there, down 8 cents. It's giving some support, but I have to tell you, when I look at it, I think this is part of the question as well. When I look at Goldman Sachs, I'm saying have patience. We're going to get, I think we're going to get a real nice buy on Goldman somewhere in the 220s. I don't know whether it's low 220s or the 220s, high 220s, but that's my thinking. I'm just having patience. And if you look at Visa, which had that breakout the other day, remember the spectacular breakout, it gapped up, and I said, I'm calling this an E. Now it's gone to a G/C. Red candle, down 80 cents, having made an all-time high. And these are very important parts, components in just the overall look of where the XLF, the financials are, where where they are trading in relation to. This is now a Dow stock, and it was giving strength to the Dow. Now it's a little bit weaker. So these are very important stocks. I think they're getting close to a topping phase, just shorter term, but we aren't quite there yet. Basil Chapman, Tiger Technicians Hour. Dow's now only down 37.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I got to run through this now. So we've got, Sarah wanted to know about the VIX index. Here's the VIX index. The VIX is right now at VIX.X. Look, it is... Why am I hitting wrong keys today? VIX.X. There we go. It's down. It's down 41 cents at 15.08. And that's just saying to me there is enough residual strength inside to maintain the sideways trading band. So that I don't, at this point, I don't see a breakdown. I just don't see a break to the upside occurring at this moment of significance. I can see we're getting real close to another opportunity to bounce. Yesterday, my Chapman wave chin gauge flashing, which suggested that there should be a 9 to 11 point E-mini futures S&P rally that should help the S&P rally intraday. Well, we got that overnight, and it did help them a little bit, but that's not what I wouldn't call that a real rally. We need to be in the plus. The Dow needs to get to about a plus 30, the S&P about a plus 5 or 6 for that to rub off. Haven't got that yet. So we'll see. Days young, it has 2 days in which to work, and we'll see. And that occurred yesterday, so that's today and tomorrow. Next question I had was, again, Goldman Sachs. Let me just do this. So many people asked me about Goldman Sachs. Maybe I wasn't clear enough, but here I am talking about it again. Goldman Sachs trading at 237.22, up 55 cents. It's trying to establish some kind of a little bit of a bottom here, but this kind of pattern says the bottom that you make with a stochastic at 7% has to see a price move that takes it well above the 9-period moving average, probably to the first peak on the left. Well, that first peak on the left is way up in the 260s because there hasn't been a peak. Oh, no, there it is. Right here. The little one here will be the very first one that we're looking at. And that would be at 243.07. Very good. So it's about 243. It's about 6 points or 7 points above. So if you can, Wednesday, Thursday, Friday. If Friday at 4 o'clock, Goldman Sachs is trading at 243, that's very impressive. If it's just stuck here and hasn't been able to get out of its own way, it means that the stochastic is flattening in the single digits. The best you can expect is a little double-digit test and then back into the single digits. The weekly chart suggests it needs more time. Make it real clear. I think that Goldman Sachs has limited upside, and it might have fairly limited downside if you say, well, upside is maybe 20 points, 15 to 20 points if everything comes right going into June. But I want to see testing of the bottom before I think that that's going to happen. And I wouldn't be surprised if it's more likely at 237 right now that we've got 8 to 12 points downside and then we might be getting ready to see the volatility index screaming to the high 20s for whatever, I don't care what the reason is. That's what I'm thinking is needed now. We've passed the point of return. Now there's a point of no return until I get a climactic move in the VIX index. We've had a number of little mini lows. That's not good enough. Now this is what I want you to do. I want to go through a list that was sent to us early this morning by Dave into the den of the earnings reports. So let's just go through that. So MA was MasterCard at 8 o'clock, and we can see the result is it's up 6 at 186 and has gone to a gap up leg C, and that's really important. It's a leg D in the weekly chart, a leg F/B in the monthly, and it makes the support in the ones at 186. It makes support in the 177 to 174 area really good, and it would have to be it's going to have to be a really big turnaround for it to fail and give back all the gains. I can see some of the gains, but to go into the ones under 174, that would be something serious. Next thing I want to look at is, I'm just running the list. Oh, sorry, why did I move the list? Let me go back again. Okay, so I'm just going to go through these very quickly. So Chesapeake, CHK. Chesapeake earnings came out, and CHK. I thought I did that. CHK. Slippery fingers this morning, huh? Down 0.5 cents at 2.93. Nothing to see here, folks. Okay. This is very interesting. CVS Pharmaceuticals, because for my subscribers, I'm looking at the potential for the rotation. The CVS is trading at 2.20 right now at 65.77. I'm going to be following this real closely because it's in an area of the whole medical fraternity that says that it is there is a chance that CVS could start to produce the kind of care in store care, medical personnel coming in and that sort of thing. I want to see if that rubs off, if that suddenly becomes a look into the future for the intermediate term. So it's just on my watch list, no big deal. It's down sharply, gap down after the earnings report. Estee Lauder, I mean, this is really something. EL is the symbol. Estee Lauder as a gap down, huge gap down 9. It made a high. Peak F in the weekly chart. Oh, I never did the monthly, but the monthly made a doji candle last month, and it's pulling back sharply. This is one that was leading the pack, and my contention was when I was looking at these about a month ago that it's very interesting that I've said this many times that it's in the, can get into trouble for this, but I'm just giving the way I look at it. It's in the area of cosmetics. It's in the area of looking good, male, female, it doesn't matter. That is the last to take it on the chin, because that's the last thing you're going to give up. If you want to be looking good, you want to squeeze as much as out of the products that you can afford while you can. So this says to me, this is something to take into consideration and to be putting into my socioeconomic potpourri of icon tools, and to say CTAS, Cintas Corporation, Overalls and Uniforms and Rentals, is telling me so much about the economy. Some areas are slowing down, but it hasn't broken down. It is slowing down. So I'm watching this very closely because it made an all-time high of 178.34 3 months ago, and now it's still only trading in the 171 area. Big deal, 7 points down, 4.5%. But it is struggling to break out. But this could be like the IWM. Maybe it's not breaking out to the upside. Hasn't broken down. So if IWM, someone just remind me if I forget to look, you see it trading at 166, give me a yell. That's going to be the sign that I'm looking for to say, aha, now I'm getting more recessionary type indications. Next thing I wanted to look at was Wayfair. So now this is that innovative company. I've never done anything with Wayfair, but innovative. I know I have a friend who sells furniture. He gets it from the Philippines, he gets it from all around the world. And he says, boy, have they been giving him a run for his money. He said it's they're really good at what they do. So Wayfair is up 8.97 at 74.14. Must have had really good earnings. It's a gap up. Very good. this is the pattern that we were looking at. What was I looking at? FINSAR, FNSR. Remember, it was going rectangle. It hadn't broken out. This one just broke out. It hasn't closed there, but it has broken out. And it says Wayfair, furniture, lighting, cookware, online. W is the symbol, trading at 74.08, up 13.6%. This is something to keep your eye on. I don't know if this is the time to be buying it, but keep your eye on it because this is a whole new way of doing things. They've been innovating for the past 2 years or so. They might be getting it right. I don't know, but I'm keeping my eye on them together with Macy's, the exact opposite. Macy's is still holding pretty.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Stay tuned for the Trader's Edge with Steve Rhodes coming up. And, of course, you've got Dave White, you've got Tom O'Brien. So I'm going through the list as it is. CVS, Estee Lauder, Wayfair. So Garmin, gee, a name from the past. I wonder if I've still got my Garmin somewhere lying around. Of course, once cell phones came in with the GPS, you didn't need a Garmin. But people do need Garmin. It's up 264. It's 61.63. GRMN. Brand new leg B to the upside, great leg B because it's deeply under the last peak at 66. Peak E in the weekly chart. Hey, it's alive and well. Did make a peak D in the monthly chart, so this is good to know. A sector that's working well. Garmin. SodaStream. I don't know if I want to do that right now. Soda. Let me see. Let me just do this real quickly. Okay, down sharply. Down 6 at 88. Peak A, B, C, D. All right. Plummets to the downside. Monthly chart is still spectacular. That wasn't what I want to look at. Automatic data processing. So earlier on, I saw that it gapped up huge. Now it's up 224. capped up sharply into the 123.99, missed a round number by 1 penny. Yesterday it was trading at 112. That's incredible, 12 points like that. So something to watch. Is still under the all-time high, but this is automatic data ADP, automatic data processing at 121.03, up 2.23. So I wanted to go through some of them because they're really important. Look, Clorox with this is internal, this is not national, but internal, it's up 7 cents at 116, but it has made a major top in the 150 area and it's failing. So the charts that I saw were really important to me. The way I like to look at markets, this is not Win, this is Wyndham Worldwide. Look at this, Wyndham Worldwide trading down 470. Really struggling, made a peak A, B, C, D, a peak E in the monthly chart, up in the 127-ish area, trading out at 110. I'm watching those. I'm watching Marriott Core, down today, down 2. Peak D in the monthly chart, peak G in the weekly. I'm watching this to see. I think we've started a mini recession. It's been secular, it's been sector rotation. Will it get deeper? I'm not sure, but that's what I'll be looking for over the coming 4 to 5 sessions. Hey, stay tuned for Steve and all the others. Have a great day. I'll be back tomorrow. Check out my opening call, my daily newsletter. It comes out every day. Last slide comes out at 8:35 Eastern time. I'll be back tomorrow. Have a great day. Bye.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.